Good morning everyone, this is Vernam, Assistant Professor of MBA Department of SNS College of Technology. Friends, in today's session we are going to see the introduction part of the financial management. So in today's session, in the previous session we were discussing on the various aspects which is related to financial management. We have seen the definition of the financial management, we have seen the scope of the financial management, and we have also seen about the main objectives of the financial management. In today's session, yes, we are going to discuss on the goal, but we are going to see what are the other objectives of the financial management. So that is, we are going to see the secondary objectives of the financial management apart from the profit maximization and the wealth maximization. So when we talk about the other objectives of the financial management, so the first and foremost is assessing the capital needs of the business. So financial management helps us to assess the financial needs of the business. So with the help of the financial management, a company will come to know what is the amount of amount required in order to undergo their business operation. So without proper financial management, it is not possible for a financial manager to estimate the capital needs of a company. The second one is raising of funds. So once you have been assessed or once you have been estimate about your capital need of a business, the second one is a raising of funds. So in the first aspect, you would have been come to know how much amount of money you require for your business. So in the second aspect, you will try to mobilize those funds. So that is what called as a raising of funds. So how you will mobilize, with what sort of instruments you are going to mobilize, whether you are going to use debentures or whether you are going to use equity, whether you are going to use preference. So what sort of combination of securities you are going to use in order to mobilize your funds is called as a raising of funds. And the third one is a proper utilization of funds. That means you have to manage your funds in such a way. So you have to effectively utilize or you have to effectively invest your funds is called as a proper utilization of the funds. Determining the capital structure, that means you have to have a proper combination of the security. That means as a company you should not go more for debenture or more for equity or more for preference. You should have a balanced capital structure so that the company will not have a risk where the return will also get increased. So that is what called as a determining the capital structure. That means the company, they should have a optimum capital structure where the risk should be less and the return should be higher. The other objective of financial management is to maintain a liquidity position of the business. So if the company is not having a liquidity position, they cannot manage their day-to-day operation of their business. So the other objective of financial management is to oversee the company's liquidity position of the business, and the next objective of financial management is to identify the profitable investments. That means as a company, they will have various opportunities in order to go for their investment. As a financial manager, they should identify the correct profitability investment, and they have to go for the investment in the projects. The other objective of financial management is to reduce the risk and also to survive the business. So these are all the other objectives of the financial management. So when we talk about the other objectives of the financial management, if the organization effectively manage their business, they can flourish in the market where they can have a very good profitability. So if the company is managing their funds properly, where they can have a adequate resources inside their company, financial resources or reserves, where they can meet the unforeseen situations or emergency. Overall, if the company is having a very good financial situation, the company can easily compete their competitors, where they can tackle their competitors easily. So financial management helps the companies to plan about their profit. If the company's financial management is good, the liquidity position of the company would be sound. If the company is having a very good financial management, they can effectively manage their financial resources, and the success of the company fully it depends on the how the company is managing their finance. So, if the company is properly managing their finance, obviously they can succeed in their business and they can also reduce their risk. So, hope you all understood with today's session. In today's session we were discussing about the other objectives of financial management. Thank you all. Meet you all in the next session. Thank you.